Why chasing trades always ends badly. Some of you guys have absolutely no patience, and I'm here to solve this for you guys, inshallah, if God wills. Okay, let's talk about why you have FOMO, why sometimes you just get in randomly without even thinking, and why you're thinking about the bread too much and ruining your long-term goals. Okay, so we're going to be talking about why chasing trades always ends badly. Okay, and we're going to be talking about the science, the psychology behind it, and data behind failed impulse trading. Okay, so the hidden trap, chasing trades is a psychological trap. Okay, understand that you wanting to make bread in that moment is destroying everything, destroying all progress that you have been making. Even if you were to make money on that trade, your mental progress is going to be thrown off. You're supposed to be sticking to a set of criteria that you play forever, okay? That you stick to, okay? If you trade break and retest, then you trade break and retest, okay? If you trade resistance breakouts, you trade resistance breakouts. If you trade support mirrors, you trade support mirrors. Okay, whatever you trade, whatever verified system that you use, play that, stick to that. Okay, it doesn't matter. But chasing trades is a psychological trap fueled by fear of missing out. Okay, so FOMO, it's fear of missing out. And sometimes you guys might be thinking, oh, I need to get in to make some bread because everyone else is making some bread. And whole time you're just destroying your whole brain and you're destroying your whole mental progress. I want you guys to be successful and I don't want you guys to be giving up. Okay. So emotional bias and impulsive decisions are really going to be destroying you guys' mental. Okay. So you guys need to pray to God that the devil can really just stay away from you. Okay. Because that's pretty much all it is. The devil wants you guys to be greedy. The devil wants you guys to fail. The devil wants you guys to not achieve your goals. So when the devil gets in your brain, pray it away. Out of blame, shit to the name, and just get it out of your brain. Okay. Because that's pretty much all it comes down to. It's in just evil deep inside of you that just needs to be prayed away because your greed is destroying everything. And I understand you guys want it bad, but in trading, you have to understand if you let that greed get to you, you can literally destroy your entire life. Okay, especially when you start getting good. So you need to get right with God. You need to get right spiritually before you think about coming to these charts. Because especially when you start throwing on 6, 7, 8 figures worth of size, if you're not right spiritually, you can literally destroy your whole life. Okay. So just like women, you need to be right spiritually, learn how to be calm, learn how to think logically. Okay. Same thing with relationships. Okay. Trading is the same way. If you react impulsively, you can destroy everything. Okay. Just like relationships. Okay. So trading is the same way. It's going to take patience. It's going to take staying calm and just avoiding any stupid temptations that are just going to destroy all the progress you've been working on. And scientific studies and financial research consistently show that impulsive, unplanned trades lead to negative outcomes over time. And that's going to be for most things in life. If most things that you do are unplanned and just impulsive, a lot of the times it's just not going to work out successfully. Okay. And God tells us this. And this is why it's important to really just be patient. Okay. So, understanding the psychology of trading is key to avoiding a cycle of chasing trades and repeated losses, especially when you guys start getting good at trading. Okay, that's actually when your psychology is really going to be the most important. Okay, when you're making consistent money from the income, when you're making consistent income from the market, my apologies, then you're going to get predefined initially that you should be winning every single trade. Okay, and the reality of that is that that's not true. You are not going to be winning every single trade. Okay. So when you do lose, accept it, put a smile on your face, and go on to the next trade. Do not crash out your entire account. Do not destroy it all and send your P&L straight down to oblivion because you cannot accept a simple loss. Some of you guys just need to get out of your head, get right spiritually, understand you're not going to win every single trade financially, but if you lost, take a lesson from it. Okay. Study it, journal it, and progress on to the next trade. So then this doesn't happen again. And the psychology of chasing trades. Okay. How biases and emotions drive impulse decisions. So let's talk about FOMO. Traders feel pressure to enter late into trends, often at peak level risk, driven by social comparison and media hype. Okay. So traders are going to feel pressured to get in late. Okay. Say price is just ramping upward. Okay. And you guys have no sense of structure. Say there's not even a resistance above current price, right? And you guys are just getting in at all-time highs. You don't even know how hard price wants to pull back. There's no resistance target because you just bought in at all-time highs. A lot of people do this with Bitcoin a lot. Okay, it's a lot of people who buy Bitcoin at all-time highs and they end up catching the whole sweep down and then say trading's a scam and then sell for a loss and then it goes right back up. Okay, you guys need to understand support and understand resistance before you come onto the charts too. This way, FOMO is not going to happen. You're going to be able to put everything within a logical perspective. Okay, the reason why it's not working out is because you don't have a plan. Okay, if you're going to long, break and retest, or resistance breakouts are going to be your best friends. Okay, or catch sweeps from a bottom. Okay, from lower points of break and retest below current price and catch a sweep up. Okay, inshallah. So, loss aversion. The psychological pain of losses is twice as powerful as the pleasure of equivalent gains, fueling irrational trade entries, especially my futures traders. Okay, on options, you have to go select the contract and stuff like that. It's a little different. It takes a little more time to get in, so you can stop yourself from crashing out a little faster, I believe. But when it comes to futures, you can crash out. Just clicking buy, okay, and just clicking sell, you can just click, 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 and you can destroy your whole account, okay, within a single day. If you're not careful, if you're not spiritually right. This is why it's really important to be right with God. So then this type of stuff doesn't affect us. So then we can be strong, we can be resilient. We don't get broken down by any little thing. We don't get broken down by the devil's stupid games. And we can stay strong, stay resilient, and beat the spiritual realm and be the conquerors and understand that God is king. Okay. So we worship God for protection and understand that when we're worshiping God, we have that humbleness. Stuff like a loss is not going to be able to break us down. Okay, you're going to be able to understand that a loss is part of the game, especially when you go read your holy text. Okay, I recommend you guys go read Quran, Bible, Torah. Okay, go read the holy text. There's a lot of psychological information within those books that's really going to help you, especially applied to trading. You guys are going to understand the importance of patience, discipline, etc., in such a more impactful way. And when you come onto the charts, it's pretty much going to all be easy. You're going to understand how reflective trading is, okay, to life. Trading and life are pretty much a mirror. Okay. If you're an impulsive, disgusting person, you will lose all of your money within the charts. If you're a disciplined, hardworking person who could stick to one thing, you'll actually get successful. Okay. So trading is really going to depict life. Okay. So you depend and you depict what type of person you want to be because God gives us free will. That's the most beautiful thing about life, I do believe. So you could choose to be a great, righteous, disciplined person or be a sloppy, sad, lazy, undisciplined person. So it's going to be up to you. So, scientific studies on trading behavior, evidence from behavioral finance and neuroscience, impulsivity research. Neuroscientific studies show impulsive decision making activates brain regions linked to risk seeking and pairing rational judgment. Okay, so understand that rational decision making, constantly irrational decision making, not even thinking, can really just destroy your brain and it can destroy your ability to make rational decisions. Now you can get it back. It's not all lost. Okay. So if you go through a period of crashing out, your P&L is tanking down, you got to take a break from the charts. Okay. Take like a month off, come back, paper trade. Okay. Go PT, take your time, catch your edge, stick to one setup, and then come back and stick to that. Okay. But some of you guys are not going to be successful if you do not know how to pause. And it's okay. Sometimes we all make mistakes. There's going to be a period where we're doing dumb stuff, making quick, irrational decisions as human beings. That's fine. This is why we pray to God for forgiveness. We get right spiritually and we stay patient, we stay disciplined, and then we just turn up. All right. I want you guys to turn up your account. I want you guys to start getting your bag, start chasing that paper, start getting that bread. All right, we're in stack mode. Some of you guys are selling yourself short. You're not believing in yourself. You're not going hard enough. It's time to get in stack mode. All right. You cannot get in stack mode by destroying your P&L. Stack mode is about being a righteous, God-fearing, disciplined individual. Okay. You need to be sticking to your setups, making sure you're waking up, praying on time, making sure you're growing your P&L, making sure you're working hard outside of the charts so you have more capital to put into the charts. Some of y'all aren't going hard enough. And then you guys come to me telling me that you guys want it bad, but I truly don't believe it at all. Okay. So let's go ahead and talk about some market data. Large scale studies reveal that 70 to 90% of retail traders lose money when relying on short term emotional trades. If you do stupid, short term, emotional, irrational decisions, you're going to face the consequences for it. Okay. So it's time to get logical. You guys aren't in your bag. You guys aren't getting to the level that you want to be. You're not being as disciplined as you want to be because of the fact that you're just being sloppy. You want the results without putting in the work. You want the results without the discipline. And it's absolutely disgusting. And you're going to continue to be held back by your own self. And you're going to keep yourself on the hamster wheel consistently. Some of you guys want to go up, but you decide to be the little hamster on the wheel, running over and over and over and over and over again in the same circle because you don't want to break free from the chains that you've binded on yourself. Okay. And neuroeconomics. Okay. Brain imaging research links dopamine driven excitement and to overconfidence and market timing decisions. Okay. So when you guys feel like, yes, this is the right play of all time, sometimes you guys might do stupid stuff like oversize. No, I don't care how good of a trade it is. You stick within your risk management rules, stick within your parameters, and don't break it. Okay. Just learn to be disciplined. Be in stack mode. Get in your bag. Stop selling yourself short. Go buy that lamb. Go retire your parents. We got stuff to do. Stop wasting your time. So, market volatility and randomness. Why chasing short term moves fail statistically? So, let's talk about random price movements. Short term fluctuation and stock prices are often indistinguishable from random noise, making reactive trades unreliable. So, you guys have to understand that there's going to be a lot of spikes and a lot of dips sometimes. Okay. And this is because of a couple of factors. There's going to be news. Okay. Especially for my stock traders, there's going to be, and my crypto traders, CPI is going to be a big thing. Okay. PPI is a big thing. Okay. We have financial news just from the governments, stuff Trump is saying, etc. Okay. News affects the market. Okay. So that's why random price movements can come in and sometimes can ruin a setup or could make a setup that you were waiting for happen quicker than you expected. That doesn't mean that it's over. Okay. That doesn't mean that you get sad. That doesn't mean that you crash out. You got to just understand that it's a part of your plan. And let's talk about volatility clusters. Market exhibit periods of cluster volatility, increasing risk of whipsaw, losses for more of those who are chasing the moves. Okay, so a market is volatile. People are taking heavy, big losses because they don't know how to be patient. So a market is extremely volatile. Either take advantage of that by taking a pre-planned setup that you've had marked days, weeks, or hours before. Okay, don't just get in because you see market being volatile, trying to catch the bottom when it's a downtrend, or trying to catch the top when it's an uptrend, doing anything on the block, or trying to just catch when market's pumping and then eating a whole pullback and then selling on the pullback. Okay, just getting in with no plan when there's volatility is going to lead to your demise, your destruction, and that's why you guys aren't achieving your goals. Okay, let's talk about the illusion of predictability. Human brains overestimate patterns in random data, leading to false confidence in trade timing. Okay. So we can't go off of illusions in this world. We actually don't know everything. Okay. God knows everything. So your brain, you can only put a couple things into place. How much money you put into the market. Okay. That is something you can control. Your risk management. Okay. So how much money you put in the market is something you control. Where you enter. Okay. Where you enter is something you can control. Your entry, you can control that. And you can control your exit. Okay. When you get out, that's when you sell. Okay. You can control your exit. All of those things are in your control in trading. Everything else, whenever price moves, however price moves, not in your control. You have to be okay with that. Okay. And this is why you need to be comfortable with holding trades for time. Let your trade breathe. Give it time. Let it run. Stop destroying the process. And let's talk about the risk of overtrading and how you guys can just become L people. You're just going to become an L person. If you don't know how to take your L, you're going to become an L person. Okay. You're going to be a sad, desperate individual. You're going to be wondering why you're not achieving your goals. You're going to be wondering why you can't grow your P&L like you see people doing on social media, on Twitter, etc. Okay. And you're going to be comparing yourself. And the only difference between you and these individuals is that they're being disciplined. And one, you need to stop looking at anybody else. Stop looking at other people. Okay. You need to worry about your journey, focus on yourself, and look at yourself in the mirror and work on the things in your spirit that's tarnished. Okay. Anything tainted within your spirit, you need to clean it up. You need to get with God and really just clean it all up. All right. So constant monitoring and impulsive entries increase stress, leading to fatigue and poor decision making. Stop staring at the charts all day. Okay. If you're staring at the charts all day long, okay, eyeballs glued onto the screen, okay, just staring at the monitor all day long, watching the setup go up and down, up and down, up and down. Okay, you need to stop doing that. Okay, some of you guys are absolutely maniacs, and I understand if you're in the period of studying. Okay, when I was first grinding, I was trading views 16 hours a day. I understand. Okay, but once you're out of that, once you're in your trade, okay, even if you are studying, you don't have to look at the trade that you're in. Just go look at something else. Don't sit there and eyeball the trade that you're in. Don't do that. What you're going to do, set your alerts, okay, on whatever broker you're on. Set your alerts so you get a text on your phone, you get a notification on your phone. Boom. You know whenever your trade hits take profit or stop loss, you're going to be good. Stop staring at the charts all day because that's going to lead to you doing more bonky stuff. You might scale in. You might just do some whack decision that's going to hold you back. Okay. And doing whack decisions is the main thing that holds people back in this world. If you guys stop doing whack stuff, you'll actually get somewhere. So if you learn to not scale in when you're already in a good trade and then you eat the pullback and then you sell for break even, if you just stop doing whack stuff in the world, you'll actually get success. Some people wonder why they don't get anywhere, and it's because they're just whack. They do whack, lame stuff. And if you do whack, lame stuff, it's going to come back to you. And frequent trading and frequent chasing bread like that, not in a healthy mannerism, not within a disciplined mannerism, is going to just lead to you being a hound, being a fiend, and you're going to be stuck in survival mode. And frequent trades amplify transaction costs and slippage, especially for my forex traders. Steadily depleting your trading capital. Plan like one, two good trades a week. Okay, a couple trades a month is really all it should be. Okay, maybe like 10 trades a month max. Shouldn't be more than that, honestly. Okay, let's talk about compounding losses. Chasing trades after losses create a feedback loop. Okay, increasing risky bets and deeper drawdowns. So not accepting your L the first time can literally lead to you guys destroying yourself. Okay, so say like this, for example. Okay, if someone is not on your team, say in a relationship, for example, say if someone cheats on you, for example, you don't have to go do something back. You don't have to go retaliate with power. You can just go boss up. Okay. Same thing when you take your loss. You don't have to prove yourself right. You don't have to throw more bread at it, throw more bread at it, throw more bread at it. Stop that. Okay. Throw more. You don't have to do that. Take your time. Understand that the next trade is going to come. Boss up, go get some more capital, take the next trade. Stop taking that loss as such a emotional trigger within you. All right. That loss was supposed to happen. Come back stronger, plan out the next trade more logically, come back better. That's the whole point of this game. It's the whole point of this life is to get better. 1% better at least every single day. I'm going for 100% better every single day, personally. I'm not even putting a cap on it. So let's talk about chasing versus being patient. So visualizing the cost of impulsive entries. So chasing a trade, let's give an example. Okay. Say you guys got in a trade for $500, right? Okay. So you got in for $500. Okay. And you got in on a FOMO candle. Okay. So price decided to just blast upward. Okay. Really, really hard. Okay. And you eat pullback. Okay. So instead of you entering on a logical entry, you eat a pullback. Okay. Now you're down $300. Okay. Say you sell. Now you're at $200. What you guys, some of you would do would be like, okay, price is falling. I see it at the support. I'm going to take it again. You're going to put that $100 in. And then instead of waiting for a true verified level, like say up here, price is going to go ahead and fall down again. And then you're going to lose. You literally just took the same trade twice. Okay. Some of you guys are taking way too many trades within a short amount of frequency. You need to relax. If it doesn't work out after a logical formation, okay, that's planned with price action too, it just wasn't meant to work out. And make sure you guys are doing your setups on your higher time frames too. Use your 4-hour, use your daily, and use your 30-minute time frames, okay? And comparative outcomes. Over multiple trades, the patient trader's equity curve is smoother and consistently profitable. So in this world, if you're undisciplined, if you're impatient, if you're impulsive, then you're going to be a inconsistent person. And this is why some people don't get anywhere. Okay, and let's talk about institutional advantages versus retail chasing. Why algorithms outperform emotional traders. Okay, the computers, and a lot of trading is done by computers. That's actually what limit orders are being triggered by a lot of the times. Okay, so limit orders are actually being triggered by a bunch of computers. Okay, people as well. Okay, but those people a lot of the time have computers set up. Okay, and institutions use algorithm executing thousands of trades per second with predefined strategies, eliminating emotions. Okay, and retail traders tracing trades face delays, slippage, psychological stress, compounding their disadvantages. Okay, so understand you need to be trading like an AI. You need to be trading like a computer. That's how sterile your and sedated your emotions should be when it comes to trading. You should actually be like a robot when it comes to the charts. Okay, you should literally be AI. Okay, when it comes to charts, you need to be AI. Okay, and that's in a good way. You need to only be trading logical formations. If you're going to trade along, then you need to trade break and retest. Okay. Break and retest is going to be all you're looking for. Even if price is dipping down, okay, you might want to look for an area of resistance that was created below potentially. And then you guys can go ahead and catch the bottoms like that too. Okay. So if you're going to trade break and retest, trade break and retest. Okay. And understand that institutions benefit from liquidity access, faster execution, and privileged data, making retail chasing even riskier. So these people have limit orders placed. The computers are already entered in where they want to be entered in at. They're just waiting for price to trigger it. Okay. So computers are trading. That's what you're trading against. That's how disciplined you need to be. Okay. And study shows that 80% of retail traders lose money, with most accounts wiped out within 12 months. But you guys can be successful. Reason why that's true, and the reason why that statistic is that high is because most people are just undisciplined. Okay, it's not hard to crush everybody in this world. Just worship God, be righteous, and be disciplined, and go harder than everybody else. Okay, and be disciplined. Take your losses, and let that turn you into a boss. Okay, that's the stack mode way. So short-term focus. Retail traders overwhelmingly focus on short time frames, like the 1 minute, 5 minute, 15 minute, amplifying randomness and costs. So a lot of short-term focus is really going to destroy your trading, okay? Because the institutions, the hedge funds, the banks, the people trading with large amounts of money, they're on the higher time frames. They're looking at the daily, the weekly, the yearly, the 4 hour, okay? And the 30-minute is the lowest, okay? Institutional edge. Data confirms that institutions consistently outperform retail by exploiting retail's emotional biases. Okay, don't get emotional. Just trade logically. Practice your risk management. Plan your entries. Continuously learn. You guys can go to StackMode.net, where I offer free trading education. You guys can get a free mentorship call, and I just overall teach you how to trade, grow your business, and get into stack mode. So patience beats chasing. Chasing is going to lead to just failing, and impulsive, irrational decisions is going to lead to your downfall. Okay. And 80% of retail traders lose money just because of impulsive, disgusting, undisciplined behavior. Most people lose because they're just undisciplined. So just be disciplined. It's really easy to win in this world, inshallah. And then you'll have a big, giant smile on your face. When you're working harder than everybody else, when you're more disciplined than everybody else, when you're not making disgusting decisions and you're going hard, you'll be able to win in this world. Because that's what everyone else is doing, making irrational, impulsive, disgusting decisions and not going hard. So you got to be the one waking up early. You got to be the one motivated. You got to be the one hungry for it, and show everyone that discipline wins. Show everyone that God wins. Show everyone that righteousness wins. And that structured strategies, risk management, patience, and being righteous is going to consistently outperform reactive trading out of greed, out of FOMO, out of fear. Okay. I love you guys so much. Stay prayed up to God. Keep grinding. I'll catch you in the next one. Peace.